Hey traders, John Howell here. In this video I'm going to walk you through what I'm seeing right now with the silver and gold. I'm going to walk you through the GDXJ, the SIL and the SILJ as well too in these in this video here. So let's get straight into it. Guys, do not place a trade based on what you're seeing in this video because trading is risky and it can cause substantial financial loss. There's no guarantees of making money in the markets and it takes you a long time to become a really good trader. So be smart about the way that you are trading, especially in this volatile environment. Now, I know I say that disclaimer there, but really, guys, please, your over trading, your impatience, and all those things, the discipline, the not being consistent, they're the things that's really going to make you or break you as a trader, okay? So be smart about the way you're trading. Now, guys, first thing in the description, if you'd like to learn my #1 chart reading and trading technique that I use, to help me give me the odds on my side, then click on the first link in the description below. I just recorded a free training walking you through in absolute detail of that. Now let's get straight into today's video here when it comes to silver, gold, and all that sort of stuff. Now looking at this is a silver chart here, and firstly, what's happening here on the silver chart on the short term? Short term, we're just getting a lot of resistance from where we are right now, aren't we? But if I start to bring up this weekly chart here, look what's happening right now. There still is a very little indecision here. And what I mean by that is, let me just remove this trend line here. We don't need that. The first thing you see, right, is that we've had this rally down. We've gone sideways. We had this rally back up through now. Right now we're rejecting this level, which has been the last significant areas of support and resistance all the way through this chart here, which is the last couple of years. Actually, no, my bad. Actually, it's not. It's a weekly chart. So the last 1, 2, 3, 4, probably 4 or 5 years, that area where we are right now, around that $16 level, has been a strong area of resistance. Now, if I draw a trend line from there to there, connecting the highs, as you can see, that's where the trend line is, where the market's had a lot of respecting of that. If we start to break above that, now, let me stop myself here for a minute. What a lot of people do and what a lot of people get wrong in the markets, they say, okay, silver has definitely bottomed out now, so I'm going to try to get into it. Where the market really hasn't started to give you any gauge of that. Do you know what I mean? Like, it really hasn't given you any gauge or any guidance of anything like that. Now, what I mean by that is this. Is that if you look at, if a lot of people say, okay, the market's run down, the market's rallied back up, they think the bottom's in because of, and then there's a story. Right? And you know yourself, right? Whenever you create a story around something, it generally equals you losing money. Do you know what I mean, right? And you've been there before. So one thing that is so important, right, is start to stack the odds on your side of doing well, because trading is all about probability, isn't it? It's never about certainty. No one knows what's going to happen tomorrow. No one knows what's going to happen this week. Make sense? So what we can do, we can start to stack the odds on our side of doing well in our trading by waiting for higher probability setups. Now, what is a higher probability setup? Let's actually start with just the foundational work of, looking at the trend. If the sellers are lowering their price, call it manipulation, call it whatever you want to call it. It doesn't matter, right? We trade the price action and that's all we can trade. So we can either go with the market or we can fight the market. Or we can just simply we can just do what most professional traders do, and what I'm doing is sit on the sidelines, wait for a very clear, crystal clean setup, and then pounce all over that like a panther. So, do you know what I mean? It's so for me personally, what would that mean? I see a lot of people think, okay, the bottom's in right now with silver, right? So when we have a look at this here, silver could easily just do this here, right? We never know what's going to happen. To give ourselves a much better chance, for me personally, what I'm waiting for with silver to actually get into some sort of investing position, meaning I'm looking to buy and hold it for a couple of years, or maybe longer, maybe shorter, I don't know, is to give myself some sort of a chance, right? And what I'm looking on the short term is this here. So if I can see these are the highs, this is the last high, this is the last high, this is the last high, and we can see the trend line come down through here, I would want to start to see this market rally back up through here somewhere, then come back down and start to form a nice significant high low, breaking past all these key areas. Do you see what I'm saying there? Now people say, oh, but John, now it's too late. No, it's not. No, it's not. It's not too late. Don't jump in. Don't try to fight the market. Don't try to predict the market. And if you're unsure what's happening right now, then don't get involved with that market. Make sense? So what's happening right now is that if the market rallies up and rallies back down, that's where the highest probability trade for me, and that's where I'm going to put my money, right? One of the biggest things that stops you as a trader is that you say, well, I'll try this out. I hope this is the bottom. I think this is, or here's, I read this white paper and it said this is a really good investment, so I'm going to get into it. Do you know what I mean? Like all this other story. Wait for a higher probability setup to get into the markets. And once that happens, now I've increased my probability tenfold of doing well, which is going to give me the confidence to put a bit more money on my account instead of saying, you know what, I'm only going to risk 1% on my account. You say, you know what, I'm going to put 5% of risk on this trade because now I've increased my probability tenfold. Do you see what I'm saying there? So I'm trading less but a higher probability. Therefore, over 12 months, I'm likely to do really, really well compared to the person who's trying to pick tops and bottoms. So if I get into here and it start the trend, that's when we can start to see. You see that there? Like, see how I've opened up? People try to get in down here, hope it's a bottom. Wait for some sort of a high probability turnaround, and then we could probably see a year or 2 year big bull market out of silver. This is the same for gold as well too. Do you know what I mean? Like if I go to have a look at gold, this is the same thing for gold. What am I waiting for gold? I'm waiting for gold to get back above 1350. People are like, I want to get in now because it's definitely the bottom and I don't want to miss out. You're not going to miss out on anything, right? That FOMO, fear of missing out. You're not missing out on anything. No, gold is not going to open where it is right now or close where it is right now and suddenly open up at 2000. And people think that. The markets don't work like that, right? Things take time. Yes, we can start to get some very big movement out of it. But if I go back, say, to the GLD price, even back in the day of, say, of 2011, 2000, when we had a big bull market, right? Look here, look, see how from this point here to 2000 and say halfway through 2011, that there, do you realize that was a year and a half of upward movement? It wasn't 1 day, 1 week, or even 1 month. Do you see what I'm saying there? So we just need to slow down and wait for higher probability setup. So if I'm looking at the GLD, which I am personally, I want to get in on an investing position, but I'm waiting for a higher probability trade because right now we could easily hold here and drop back down. Does that make sense? So when we're looking at the gold and silver price, what I'm waiting for is to wait for high probability. What is that? Well, this is the last high. This is where the market is sort of $13 or $130 on the GLD here. That's where it's had a lot of problems, right? So if the market starts to break it back above, and then we start to get a nice significant, this is the weekly chart by the way, a nice significant higher low, and then we start to break up, guess what? Now I'm in a very high probability chance. We're now starting an upward trend, and now we're breaking out. If you've noticed if you notice what gold has been doing on this GLD price, which is basically gold, you notice that literally from 2014 to where we are right now, notice how it's been sideways. And how you know that is you look at my moving average, right? So notice how my moving average from here to here was quite strong. And then see how it started to what we call flatten out. We went strong here and we flattened out, and then it went sideways for a bit, and now it's gone sideways for a bit. Do you see how that works on that weekly chart? So that tells me that we've just had a sideways market and people are getting chewed up. What I want to see is I want to see this market over a few weeks or a few months start to form a nice trend, start to break out, and then I'm like, okay, cool. Now I'm getting ready for a nice move on the upside, and that's where the highest probability trades are going to be. Slow down, wait for the right opportunities, because I guarantee you, if you look at your trade from now to the end of this year, those who are patient and trade less and wait for high quality setups are going to whip everyone else's backside, because everyone else's backside is trying to pick tops and bottoms. They want to get in now because for some reason they think they're going to miss out on something. Then you're not going to miss out on anything. There's always opportunities. The thing you're going to miss out on is the opportunity when it presents itself, because you're blowing yourself out of the water by trying to get in and out of these markets really, really quickly. Slow down. Even if you only traded 10 times a year, right? Just 10 times a year, but those 10 times you were trading setups that give you like a 90% success rate, you will do so far better over a 12-month period just by doing that than trying to trade the way most people trade. Make sense? So that's the GLD price there. Same for the SLV. The SLV, I want to start to see a nice break above, the SIL. I want to see a nice break above the silver stocks, break above, say 35 for it to start the trend. SILJ, same sort of thing as well too. I want to see a nice break above, probably 12 up, probably even up to $14 before we start to get a move there. Looking at the GDXJ has been very, 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 very quiet where we are right now. But on the short term, what I want to see is I want to start to see this thing rally back above, say get up to 40 and possibly even up to 45, and then start a nice trend in place. Because if that happens, then we have a high probability of then running to the upside. You see how I trade the markets? I wait for high quality, high probability setups. Does that make sense? So if I'm running up through here and then I have a nice pullback through here, what I'm looking for is, now firstly, I'm waiting for my setup. You know what I mean? Like, I'm not just saying I'm gonna get in based on that there. But for investing purposes and you know, a bit more of a longer term style of trading, wait for a bit more of a high quality setup and then trying to pick the bottom right now. Makes sense? Now with GDXJ, I do believe we're about to see a big move. When this thing starts to really pick up where we are right now, because we've just been quite sideways for quite some time. When we do start to break up and out and we start to change this trend, I do believe we're likely to start to see, because if I look at this chart through here, you can see how quiet this has been for a very, 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 very long time, how quiet this has been. When it does break out, we're likely to see some pretty big moves out of it. And the same for the GDX as well too. Once the GDX starts to get back above, say 25, then we're really starting to change that trend. And that's when I'll be looking for a bit more investing purposes as well too. So I hope this video helps you out, guys, with your trading. Please just be patient. Do not be in a rush, because your impatience is the #1 biggest killer in your trading. If you just slow down and be patient. If there's no trades for that week, there's no trades for that week. If there's no trades for that entire month, there's no trades for that entire month. You don't have to be involved with the market every single day. The market's moving up, the market's moving down. You can't predict what's going to happen tomorrow. You can't be trading like that, because you're going to get chewed out of the markets. Have some sort of a high quality, high probability sort of chart setup that you look for, and only trade that only, because you will get ahead so much more by doing that. That makes sense? So please, guys, please. So many people right now, I just heard a guy recently, he came to me, he said, John, I just lost $170,000 in the markets in the last 3 months. $170,000 in the last 3 months. And he said, John, everything you're saying on the charts, I did exactly basically what you're saying, which was don't fight the market. He was fighting the market. I'm not exactly sure what he did, but I think as this market was, especially the stock market, as the Dow Jones and S&P was starting to pull back quite hard, I was telling everyone to not fight this market. We're about to get a pullback. And I think he started buying call options or whatever. I think he just did some really, really, really short-term stuff to try to get rich quick. And he ended up, losing a lot of money really, really, really quickly in his first 3 months. First 3 months in the markets, he wasn't even looking at charts. He was just like going off YouTube videos and then starting to throw hundreds of thousands of dollars at this market. Now I don't have anything bad to say about that, because I have the t-shirt for that as well too. I've done that, and so I can come to you guys with saying, listen, it's not about YouTube videos. It's not about what I say. It's about what the charts are telling us. That's the only thing. Because remember, we trade the price. Right? We don't trade some fundamental which may or may not be true, which may or may not affect the price action today, which may or may not, just because there's a fundamentally good company doesn't mean we're not going to go through a bear market for 2 or 3 months. Do you see what I'm saying there? We trade the price itself. So trade the price itself. Don't trade based on what you think, hope or fear, or a newsletter or a subscription. It's pretty crazy, guys. A lot of people, especially in the crypto market, what they do is they go read some research of why this crypto is the best in the world and blah, blah, blah. Then they buy it, right? Based on that report, it goes down for a week and then they're freaking out. It's like, hang on a minute. You did a research. If that was the case, you buy and hold for 10 years if you truly believed in that. Now, that whole research, guys, I don't believe a lot of things that I see out there, guys, even if it is a good fundamental report or whatever. The reason why I say that, guys, is because, if you've seen The Big Short, what happened with the credit rating agencies? They were basically getting bought off, so they weren't going to drop their ratings. In America, what happened with the China Hustler or the China Hustle, right? All these companies that were coming from America, that the research wasn't true. That's why I say all that other stuff, my YouTube videos, everyone else's YouTube videos, and including research and all that sort of stuff, really doesn't matter at the end of the day if you're a trader. One of the best things that I can say is that because you're a trader, get really, really, really good at learning how to read the chart, because remember, it's the price we trade. And the chart's always telling us some sort of a story. Sometimes there's buyers in control, there's sellers in control, sometimes there's no one in control. Sometimes we might have buyers in control, but it's slowing, therefore we're likely to get a bit of a pullback. Sometimes we've had sellers in control, but now it's forming some sort of a bottoming pattern, and we may be getting ready for a bull run, or at least a nice bear market rally. All these different things that the market can tell us and the charts can tell us to really, really, really help you out.